Hello and welcome to this exclusive conversation on the expectations from the budget 2022. The budget of hope, as we call it, is powered by Investonomics, an initiative by ICICIdirect. The countdown for the Union Budget 2022 begins, and with it rises hope that government will continue with the reform process and work towards building an economically strong and self-reliant India. To talk on what should one expect from the budget 2022, joining me now is Mr. Nilesh Shah, Group President and MD, Kotak Mahindra Asset Management Company, and Mr. Sunil Subramaniam, MD and CEO, Sundaram Mutual. Welcome, Nilesh, and welcome, Sunil, to the show.
Thank you.
Thank you, Gitu, for having us over here.
Our pleasure, sir. My first question is for Nilesh. Nilesh, the government has in front of it the daunting task of fueling the economic growth amid COVID-19 concerns resurfacing. While there is some optimism about the economy coming back on track in FY22, post the measures taken by RBI and the government together, what is that you expect from the budget 2022 that would prevent economy from faltering and will add to the momentum?
This budget should continue the tradition of last year's budget, which provided healing touch to the economy impacted by COVID-19. If we look at our economy today, trade, agriculture, private investment, and government spending is above pre-pandemic level. But the biggest contributor to our economy, consumption, is below pre-pandemic level. Hence, it becomes imperative to support consumption.
Okay.
There are sectors like hotel, restaurant, tourism, travel, education, which required context, and they have been impacted very badly by the pandemic. Many of these sectors are concentrated in urban India. So government should consider in this budget an urban Manrega scheme, which provides employment to bottom of the pyramid engaged in such sectors that will encourage consumptions at their level and also support their livelihood. The second way to create consumption support is to give impetus to industry like housing and construction, textiles, which employ large number of people. Tax incentives on housing loan and interest on housing loan have remained constant since 2014. Some increase there will put money in the hands of taxpayers. They will mostly go and spend that money, so consumption gets supported. Because of tax incentives, people will come to buy new houses. Construction industry will do well. Many people will get employment over there. Consumption will get supported. Now, when government is spending money, they also have to raise money to fund that because you don't want to fund it by debt alone. Now, tax revenues in India are already improving. From about 9.5% of GDP, we have already reached 11.5% of GDP. So we should focus on non-tax revenue. There are two aspects to non-tax revenue. One, divestment, where we have always failed in achieving our target for last 20 years, no matter what kind of market it is. We must learn from past mistakes and ensure that this time, whatever target we put, we are able to execute. A holding company like GIC, Temasek, which gives professional managers ability to monetize government's assets, will be a good step in that direction. The second thing is non-tax revenue. Government sits on lots of assets. Those assets can be monetized. Today, globally, while interest rates are rising, they are still significantly low compared to previous years' averages. In India itself, banking system and overall system is liquid with 10.5 lakh crore of surplus money. Now, those monies can be deployed in the asset monetization program of government, whereby government will have higher non-tax revenue. They will support consumption. Deficit will remain under check. And that kind of budget will support economy and growth.
Sunil, fiscal deficit is an issue. From 9.5, we are targeting 6.8 for the current financial year. Do you expect the government to continue to push the fiscal pedal to support the fragile economy?
Absolutely. I think that this is not a time to worry about fiscal deficit. I think the situation because of the pandemic and the impact on the world has never been more conducive to a rating agency giving us a freedom of latitude on the fiscal path and the consolidation path. So while lip service can be paid to say that over the next 3 to 5 years, we will glide towards a more acceptable fiscal deficit, this is not that year. This is the year when the world is aware that India has the potential to be the supplier to the world. So I think that the government has to take advantage of that leeway, not bother about the fiscal deficit, rather focus on the quality of the expenditure. The deficit is essentially an excess of expenditure over income, right? Now, while efforts will be on to boost the income, where does every rupee go in terms of expenditure? And that's where I think the previous budget laid a very good goalpost in terms of focusing on capital expenditure, infrastructure development, boost to housing and real estate as the way forward, because the multiplier effect of capex is 3 to 4 times that of revenue expenditure, lasts for 16 to 18 quarters in terms of its beneficial effects. So I think it's the quality of the expenditure which I would focus on. And there, I think Nilesh Bhai pointed this out. It is also the fact that this is probably the last budget which is going to be not election dominated. While there are UP and Punjab elections which could tilt the thought process some ways, the fact is that the general election is in 2024.
Right.
So you have the freedom to really do something which will pay dividends in the next 18 to 24 months in terms of employment and infrastructure creation. So I think that should be the key focus on how do you spend whatever money that you believe you have in your hands thanks to a liberal fiscal deficit attitude that you can take.
Mhm. Nilesh, a follow-on question to it. When we talk about spending, government is the only body which is spending, while the private investment is still lagging behind. Is that to do with the demand scenario currently that we're going through?
Undoubtedly, it is related to demand scenario. The capacity utilization across many sectors is fairly low because demand is not there. And as I mentioned earlier, consumption, the biggest driver for our economy, is still below pre-pandemic because bottom of the pyramid people have been impacted adversely by the pandemic and they need to be supported. Now, can we move entire private sector's investment at one go? Well, that would have been very tough. There are some encouraging signs in steel, in cement, in sugar industry, where capex cycle has begun as their capacity utilization, thanks to global commodity cycle, is at near all-time high level. Now we need to ensure that other sectors where capacity utilization is low, like automobiles, if chip shortages are resolved, then automobile sector probably will go back to fuller capacity utilization. We also have to focus upon not only reviving domestic consumption, but also exports market. Thanks to geopolitical imperative on China plus one, today every country and every company is looking to diversify their supplier base. We have seen success story in mobile phone, where in FY14, our local manufacturing value of mobile phone was 27,000 crore. We are now at 2,20,000 crore. In FY15, imports of mobile phone was $8 billion. In FY22, our exports are estimated to be $5 billion. So what we have done with our mobile handsets should be replicated across other sectors where we encourage domestic consumption, we encourage higher export market share, and that in turn will create the investment cycle.
Mm-hmm. Sunil, talking about the two-wheeler sector, which has been demanding a cut in the GST slab from 18% to 12%, that we all know that the two-wheeler segment is going through a tough time as compared to the passenger vehicles, which are still holding up. So do you think government will act on that?
I think they're likely to more go the E way. I think one of the things that India is taking a leadership is in this electric mobility, in solar energy. I think India is clearly positioning itself as a leader in the alternative energy system. And I think the government is likely to go in terms of supporting more of e-scooters and e-motorbikes. And that's the path the government is likely to take. Because not only for an oil importing country like India, it's crucial to move away from fossil fuel based things, but also the fact is that India has set a goal for 2030 on the whole automobile electric revolution. So I think the government is more likely to focus on that area, because increasingly that will also be a good export oriented sector for India to dominate. So I think that will be the direction that I expect the government to adopt.
Mhm. Nilesh, Budget 22 is being presented at a time when corporate earnings growth has been very strong, and so has been the total tax collections also. Do you expect this kind of a buoyancy that we see in tax collections to sustain in the next financial year too?
Undoubtedly, we do believe that tax buoyancy will continue. Corporate India's listed corporate India's profitability has seen improvement. In Nifty 50 alone, profitability of company was about 3,50,000 crore in both FY19 and FY20. For FY23, it is expected to double to touch 7 lakh crore. And most importantly, the compliance have improved thanks to introduction of GST, and which is where tax to GDP ratio has improved from 9.5% to about 11.5%. As long as we maintain, more adequate compliance, I think we will see tax buoyancy to continue. Will there be some reduction in tax buoyancy? Answer is undoubtedly yes. On oil side, there has been cut in duties, so there will be impact on rate of growth in tax, but overall tax buoyancy should continue.
Mhm. Talking about the excise, Sunil, duty on petroleum and diesel. This is one thing that government did cut some excise, but looking at the crude prices, which are surging now towards $90 per barrel, do you expect further cut in excise?
I don't expect that. I think that from a revenue source stream, the government has to be very careful not to let any revenue source drop. So while there is leeway on the fiscal, I would rather use that leeway in terms of the expenditure, as I already explained. I don't think on any income part, the government is at a stage, especially given the fact that the divestment target again is going to be missed. So this year's actual fiscal deficit is going to be, slightly challenged. And for next year, if they're going to plan, they cannot show any drop in revenue. So I think that excise duty further cuts on petrol, I don't expect that to be on the agenda at this point in time.
Mhm. Nilesh, if we really want to pep up the demand, we need to make consumers, have money in their hands to really spend. Taxes for corporates are steadily coming down, whereas the income tax for the individuals is going up. So, how do you justify this?
So you are touching my raw nerve. I pay tax at 43%, just like Sunil, and it is high burden. Fair enough, we are contributing for the growth of the economy. If we are earning, we need to pay tax. If I would not have paid tax, I would have probably donated that money into charity. So I'm fine with the taxes. My only request is that it should be a fair and equitable burden of tax distribution. I am a Gujubai. We come from a business community. And when I look around myself, there are so many business people who don't pay their fair share of tax. And my only request to the government is that let the compliance continue to improve so that there is equitable distribution of tax among all taxpayers. It's not just that salaried class should be paying higher share of tax.
Mhm. Talking about real estate sector, Sunil, real estate sector has pulled up quite nicely in the current financial year. Do you see government rolling forward tax concessions to the affordable housing sector once again?
Absolutely. I think real estate carries two big advantages to the government and the economy. First is the largest employment generator, construction as a segment and all of that. The second aspect is other than employment generation, which is going to be the big election mudda around the 2024 election. Because India with an 18 years voting age and a younger India, there are lots more voters who are coming in who are seeking employment. So I think addressing employment from a policy perspective is absolutely critical, and real estate is pole there on the agenda. The other aspect of the real estate sector is that for every house that gets built, there are at least 10 to 12 sectors of the economy which get a benefit. Cement, steel, PVC pipes, electrical wiring, tiling, sanitary ware, paints, interior, wood. So you can go on with this list. So the multiplier effect of housing, whether it's corporate real estate, real estate, is phenomenal. And I think that has to be the central focus, because that's where private sector investment can come in and support the government by giving tax benefits. Because in the infrastructure space, the government has to spend all its own money, whether it's in roads or anything else. But if it's a real estate sector, the private sector is raising capital, and increasingly alternate investment funds and other routes are coming up to finance that. So any tax breaks that they continue, they enhance, will have a phenomenal multiplier effect on both on the economy and on the employment.
Nilesh, mutual fund has emerged as a strong investment category for retail investors in 2021-22. What is on your wish list for mutual fund industry as such?
So the government did a fantastic initiative couple of years back on Jan Dhan. It brought banking to about 30 crore Indians who were earlier not having access to banking services. This is a fantastic achievement where we have opened more than 10 times Australia's population bank accounts in a few years. Indians are great savers. Our savings rate is next to China, second highest or third highest in the world. But when it comes to investments, we are not that good allocators. In first 21 years of this century, we have exported $433 billion on net import of gold. When this gold comes in the form of jewelry, it does create some employment. But Gitu, you know that majority of this gold into Tijori, bank lockers in parallel economy. We are a patient who wants to gain health, who wants to become fit, but insist on giving blood donation. How will you gain your health if you are donating blood? The total foreign direct investment received by India in 21 years is less than Indians have paid for import of gold on a net basis. The total foreign portfolio investment received by Indians in 21 years is less than what Indians have paid for import of net gold. This budget, I expect, I request, I pray that government launches Jan Nivesh Yojana. It must educate Indians about how to invest appropriately. Don't invest only in real estate and gold. Invest also in insurance policies, mutual funds, bank deposits, small savings, REIT, InvITs, and offshore assets. It should make ease of doing investment. Today, buying of gold means walking into roadside jeweler and paying money and taking over the gold ornament or biscuit. The same thing should be there in buying of financial product. Simple, easy, convenient. If we can launch a Jan Nivesh Yojana on the lines of Jan Dhan, India's domestic savings will fuel India's investment. We won't be dependent upon foreign capital. Our economy will get turbocharged not only because of foreign capital, but also because of domestic capital. And the most important and satisfying thing will be when 10, 15 years down the line, we recognize that because of Jan Nivesh Yojana, Indians participated in owning of Indian equities and Indian assets. When our companies will declare great results, the celebrations will be there in Bhagalpur, Raipur, Chennai, Ahmedabad, Jaipur, and not just in London and Tokyo and New York and Singapore. So I pray, recommend, wish for a Jan Nivesh Yojana for spreading financial education and increasing ease of doing investment, and support our regulators, RBI, SEBI, who have done an excellent job in spreading, the investor base. Now we need to expand it even further.
Let's start it from here only. Jan Nivesh Yojana. Sunil, what are the sectors that will be in focus ahead of the budget?
So I think that, like I said, for me, infrastructure and real estate, and I think the other big sector where there should be some further progress should be banking and financial services and lending. So both, not just from the fact that banks can't reach every individual, the NBFCs play a very important part. And to that extent, the fact that credit has to reach the masses, I think that a lot of things, because post the COVID pandemic, there was a lot of questions around this sector. I think the resilience has come through. So the government should do that. They announced some things about bad bank in the previous budget. They should strengthen that, go forward. I would like to see the PSU bank mergers, because the more of a small number of large size banks we have, the better from a capital adequacy, the better from a reach perspective. I'd like that to be also taken forward. So I expect banking and financial, and the other aspect of financial services is also the wealth management and retail, wealth management, what Nilesh Bhai referred to as Jan Nivesh. Again, who is going to take it to the masses? It has to be the distribution community. So I'd like to see how, and the financial services has a distribution leg. It's not just about lending, it's about collecting money from people. So any incentives that are given to popularize investment and savings through financial services, again, is a very key focus. The third one, as I would like to say, should be exports. Because I think the PLI scheme obviously is targeting exports because it's a China plus one strategy, but exports have already shown a strong growth. But in the context of a reviving world economy, India clearly has to see itself as a leader of being the supplier to the world. See, vis-a-vis China, we carry so many advantages today. One, they have a declining youth population. We have a rising youth population, not for 1 year or 2 years. For the next 30 years, India's population, young population, is set to rise. Second is per capita income. China is at $10,000, India is at $2,000. 1/5 the income, and in terms of wages, it's probably 1/3 or 1/4 the wages of China. So the opportunity is fantastic to create what they didn't succeed with Make in India. They used PLI, but I think a larger PLI should not be limited to a few sectors. Any sector where India can be competitive, the government, I expect in this budget, to support exports. So export-oriented sectors would again be a key focus point right after the budget.
Sunil, do you expect the rising interest rate? If we are now talking about tapering and Fed going with aggressive rate hikes in the current calendar year, and then other central banks will follow too. So, do you expect higher interest rates as a deterrent to the economy?
Not necessarily. If you see two things here, right? One is India can't remain isolated from the world. So if the world economy is recovering, the dollar is strengthening, and the Fed is hiking rates, then the pressure on India will be either on the rate front or on the currency front, right? So if you don't hike rates, the currency will weaken. If you allow the currency to weaken, you can keep rates soft for longer. That's a key decision for RBI. And there again, the challenge is a weaker currency will help our export sector. So the decision is not easy in terms of the interest rate story. So number one, I think some amount of interest rate hike will happen as the world recovers, because we can't afford to widen the differential between the US rates and the Indian rates. So we'll have to hike rates somewhat to do that. But that is not necessarily a cause for worry, because the interest rates rise can be passed on to the consumer if demand is greater than supply. Right. So it's the revival of consumption and demand which is more important there. So if you see the 2003 to 8, which was the bull period for the Indian economy, the interest rates were rising, inflation was moderately high, and the economy was growing. Because even for an investor, for a corporate investor, right, unless he sees that his product will rise at inflation, he doesn't see a future of growth. So I think a moderate inflation, even if it is rising, is actually supportive of growth. And in that context, rising interest rates in a positive demand scenario, demand supply equation, can be passed on to the consumer, then interest rates will not be a deterrent. It's only if you have a situation of high inflation and a low demand growth, which is like stagflation in a way, that is the worry. But I don't see that as a concern for India. I see India recovering from the pandemic and going on to higher and higher growth and demand paths. So some amount of rise in interest rates can be absorbed by the economy and will actually encourage capital investment in the country.
Mhm. Nilesh, we just spoke about disinvestment, and government has terribly failed on the disinvestment front. We all know it. But why this failure? I mean, how do you expect the things to really move? Would you make some suggestions, that need to be followed to make this investment process, working well?
So the divestment has been failure because of variety of things. One of the divestment minister who carried out divestment in 2000s is facing court inquiries for a process which was conducted transparently. The specter of inquiries from CBI, CBC, CAG, judicial, this restricts decision making. Number three, if you look at many of the IPO companies, for example, Infosys has delivered great return over the IPO price. It's lakhs of percentage. Now, can someone accuse Infosys top management of selling the company cheap in 1994? Obviously, it will be illogical, irrational, and absurd. But that kind of things happens in divestment where 15, 20 years down the line, we end up opening up past and then trying to take advantage of benefit of hindsight. Second, there are vested interests which doesn't want divestment because a public sector organization has its own, protection regime. Now, the way to do divestment is to build consensus about the benefits of divestment with investors, with citizens of India. We have to show citizens of India that just public sector undertaking alone does not necessarily contribute to the growth of the economy. A public-private partnership can capitalize on the resources of public sector and build a better growth scenario. A case in point is Hindustan Zinc Limited, which was producing 100,000 tons of zinc in 2003. Today, about 2 decades later, in 2021, it's producing about 1.8 million tons of zinc. There's a growth of 18 times in production, and it has turned from loss-making to profit-making company. Air India, when it was with Tata's, it was a niche airline, yet it had a brand in the global arena, and people were looking forward to travel in Air India. When Air India transited to government, it became a loss-making entity, and it had the distinction of having more number of employees per plane than passengers per plane. Now, the same Air India in the hands of Tata's would have created a Singapore airline or Etihad or Emirat equivalent opportunity. It would have supported India's tourism and travel sector. It would have made Incredible India a powerful brand in the world. And maybe if Tata Airline was running, we would have more visitors than small museum in France called Louvre. This is how we have to sell it to the Indians, that public-private partnership is actually going to create better utilization of government's resources. Once we have the consensus of the citizens, then divestment will be easier. The second thing is operationalization of divestment. We are doing right now in a market divestment. Every year we sell, little stake in the company. Now, in a market, if some investor knows that there is a regular supply coming, he's not going to pay fair value for the same. We have to explore the right of strategic divestment. A strategic investor will pay a premium for a PSU or for an asset much better. And we also have to follow the model of public-private partnership, where government puts some capital initially, gives management control to the private sector along with some capital contribution. The private sector creates a great asset, and then government monetizes its investment. We see how government made money in Maruti. We saw how government through LIC made money in Axis Bank, which was earlier UTI Bank. We are seeing how government can make money on Hindustan Zinc Limited. So a combination of educating and connecting with citizens, doing strategic investment, and incorporating public-private partnership put all together will hopefully allow our divestment program to be on track.
Hopefully, FY 22-23 brings some good news on the disinvestment front. Thank you, Nilesh. Thank you, Sunil, for your time and for sharing your views on what to expect from the budget 2022 this time. Thank you so much.
Thank you.
Thank you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.